It's a new month here at Henssler Financial, and we found three important things to focus on in the market this month. Number one, commodities. Thus far this year, the global commodities basket, as represented by the S&P GSCI, is up 9%. This outpaces the S&P 500 and has been bolstered by the large input commodities in oil and copper, which are up roughly 13% year to date. With inflation remaining stubbornly high and Fed rate cut odds also falling from 70% to roughly 10% for the June meeting, we are watching commodities closely for future signs of inflation. Tensions in the Middle East have seen oil fall in recent days, but further gains into the middle of the year would be concerning for the path of inflation. Also, with gold making new highs, investors may be positioning for rising inflation and growth risk. Number two, 10-year Treasury. In the past few weeks, the 10-year yield has risen from 4.3% to nearly 4.7%. Late last year, when yields rose as high as 5%, markets struggled as rates pressured valuations. Many analysts are closely watching the 10-year yield following this recent bout of risk-off sentiment, as higher inflation readings are taking Fed rate cuts off the table in the near term. With fiscal deficits high and a large flow of issuance, we believe the pressure on yields may continue. If the 10-year were to continue to rise towards 5%, we would expect a similar repositioning as we saw in October of last year, and the potential for value to significantly outperform growth once again. Number three, China tensions. As China's post-pandemic recovery continues to sputter with significant real estate woes and disappointing GDP growth, concerns continue to mount that the Politburo may turn its frustrations abroad. We are already seeing some U.S. brands lose their allure in mainland China, most notably the iPhone, and in a chaotic geopolitical environment where foes Russia and Iran continue to move chess pieces, Taiwan remains a wild card. This recent week may be a catalyst for escalation. The foreign aid package the Senate just passed included legislation that would force the sale of TikTok in the U.S. It is expected to be signed by Joe Biden. Alongside other protectionist measures from the U.S., China may see this decision as further aggression and weigh their options for a tick for talk response that could similarly affect U.S. corporations' presence in China. And that's been your Market Minute for the month of May. Thanks for listening.